Hey guys, welcome back to the channel. In today's video, I'm going to be providing a longer term market update for Zilliqa, which has just broken back and closed above this very key level ranging from 2.8 to 3 cents. We've seen this as a major zone of support and resistance over the years, going all the way back and starting right here in the 2018 bear market. That was the floor of support for a few months. And then when that broke down, that flipped into resistance. It was resistance right here in 2020. And we also saw this flip into support right here in 2022. So when we were below this, we discussed how the bearish scenario would be flipping that into resistance, where on, say, an attempt to get back above it or a bounce, that would reject and we would just come back down. But of course, that has not happened. We have broken back above this, and we do have a few weekly candles closing over this, which is a very bullish sign, and it's starting to make this weekly chart look a lot more positive, all things considered, especially into, say, the next few months out. Because once again, when I zoom in here, you can see that we have firmly reclaimed that level. We're back to a high not seen since back here in September of 2022. And on top of that, this has all come after a break back above the 20-week simple moving average, which on my chart is the yellow line. Currently, that's sitting around 2.57 cents. So we have basically this break back above two key levels of resistance, and we're now just sort of consolidating here. We're holding this rally, we're holding these gains, and from those lows, you can see we're basically up over 100%. So the fact that we're consolidating here is a very good sign. And in general, I just want to see this continue to play out, where maybe in the next few weeks, we could just continue to close basically within this range. If something like this happens, we would start to see the 20-week moving average start to slope back up. So it would look something like this, and then maybe that could be our support for a little while on, say, an eventual and a new uptrend coming back up to some of these higher levels back from 2022. That would be the bullish scenario, and of course that doesn't have to happen, and that would all go wrong, and the invalidation point would happen if we are coming back and losing this level, again ranging from 2.8 to 3 cents. And the reason is because this has been basically the inflection point on this longer term trend, especially when I zoom out here. Anytime the price is below it, we're really just targeting this support all the way back down at the range lows around 1.2 cents. Pretty much the same thing that we saw in the previous market cycle, just breaking below that, coming back down to the next target. So if we were to lose that as our support, that's ultimately the longer term region that we would trend towards. But of course, that is not the primary outlook right now. The fact that we are closing and holding above this is a fairly bullish sign. So we should be watching for this as support, and most likely looking for some higher prices into the next several months on, say, an eventual move, just sort of forming higher highs and higher lows, continuing up this uptrend that we began from back here in December. And I especially think this is the case for Zilliqa because with the general market, Bitcoin, Ethereum, and all of the altcoins, well, maybe not all, but the majority of altcoins do look like they have bottomed. I definitely believe Bitcoin and Ethereum have bottomed, and in general, the altcoins will just start to sort of trend with the rest of the market, have that general performance where we see a lot of these altcoins just highly correlated to Bitcoin and Ethereum. So I do think that this will continue to trend up into the next few months, with again the invalidation point, and the reason where that is starting to fail is if we lose this region from 2.8 to 3 cents. Now with the Zilliqa Bitcoin ratio, this is also looking fairly positive. I did discuss this idea of a longer term double bottom off this region of support right around 98 Satoshis. We had the first retest right here in March of 2022, the big spike and then a slow bleed back down. And then we also saw a retest of that in December of 2022, sort of at the same time frame that we formed this low and the capitulation. And now we're bouncing off of that, really printing out this longer term double bottom pattern, which as it stands right now is very bullish. We just want to see this continue to hold, continue to play out, where we don't really want to see a third retest, because once you get there, this starts to look pretty weak and like it might start to break down. But as long as we're continuing to hold up in this region, I do think that we could start to target some of these higher ranges in the 200 to 300 Satoshi range. But again, as long as we do have the double bottom pattern holding. And the invalidation point here would just be if we start to have a move coming back down for, say, that third retest, because in this scenario, this looks like a really weak bounce, a failed attempt to have any sort of sustainable or meaningful breakout. So if we were to get this pattern, then I would just look for potentially some consolidation. I wouldn't really have those upside targets in mind. But as it stands, the chart is actually looking pretty strong here, so I wouldn't really look to this as the most likely scenario into the next few months, but rather just a continuation of this bounce and the follow through from the double bottoming pattern. I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave links to that in the description below. I'm fairly active over there with crypto content. As always, hope you guys enjoyed, and I'll see you in the next one.